Hi guys, this is Lee with the Market Sense for the week of March 12th, 2019. I'm trying to make sense of it, that's why I call it Market Sense. Trade Navigator software is what provides these beautiful charts we get to look at all the time, and I get to look at all day. And this is the weekly bond market chart. You can see we've held the support right here. The support was 145.05 and they've gone to 03. That's pretty doggone close. And they've been up here to the 146.10 area. They look like they're trying to go through that, which makes more resistance up around 146.29, which happens to be very close to the highs of this entire sideways pattern. And I think that sideways pattern is the most important aspect of this. They went down and tried to take out the lows here and turned right around. And when that happens, the next move is usually to go test the highs. And there's no guarantee that they're going through those highs either. If they start trading above 147, we'll have to think maybe they're going to test the high up here. But at this point, they're still sideways. And until they're above 147 or below 143, they're just sideways, and that's the way we have to look at it. No major move is going to take place until they can break out of that range. Stocks have what to me is interesting. I kind of like stuff like this. Last week was a big outside bar with a negative close. Now, market lore will tell you that that is an extremely negative pattern, and it can be. You can see way back here near the highs, that was an outside bar with a negative close that started the whole decline. But they're usually not as predictive as people expect. In fact, the week after is usually not that negative from a probability standpoint. And so as you can see, they've turned back up this week. Now, turning back up is not necessarily a positive sign. It's just sort of expected, and it may not last more than a week. I think ideally I'd like to see this remain inside of this week, which would set out a breakout above and below this bar, not one tick above, give them a little room, but breakouts would be the order of the day if they hold there this week. What we're looking at here is they could have held the resistance here 27.87. They don't appear to be doing that. The next target up here is about 28.15, and then of course there's last week's high near 28.24, 25. Again, I would just assume they stay inside of this previous week because that would set up a nice breakout above and below for next week and weeks to follow. No guarantee that they will, though. This was the first weakness we've seen since the lows at the end of last year, and it was very short-lived. They couldn't even close back below the lower moving average even though they got down there, and they've turned right back up again. So, if they just blow up to the highs, I certainly can't be surprised at that. I'd really rather they stay inside, though. I think that sets things up better for next week. So that's what we've got for you today. I hope you can find something profitable to